Hi everyone. So this is advanced taxation, and I just want to take special businesses. So under this, I will just explain briefly, and after this explanation, I will solve just one question, and we're good to go. Now, under this topic, we'll be looking at the purpose of this chapter. So the procedure for assessing business in shipping or air transport services. The first one is the procedure for assessing Nigeria life assurance businesses. The procedure for assessing non-Nigeria life insurance. I may not be taking the insurance aspects under this course or under this section. So the procedure for computation where a business is into life and non-life life transaction, how banks are subjected to tax in Nigeria, the procedures for assessing unit trust scheme, and then the provision for Finance Act 2019. Don't forget, in Ican, they may test 2020. So you have to understand how they frame the question. If the question they frame falls within 2020 Finance Act, know what to do about that. You are going to use Finance Act 2020. If it falls under 2021 Finance Act, you use Finance Act 2021. Okay, so very quickly, Company Income Tax Act, CITA, contains special provision with regards to companies engaged in shipping or air transport businesses, as well as those in wireless telecommunication and insurance businesses. Also, the Finance Act 2020 and 2019 introduced some amendments to CITA with respect to taxation of insurance business, estate companies, and real estate investment companies. This company this topic we are treating, this is special businesses, actually focuses on insurance businesses, air transportation, and then the shipping company as well. Now, non-Nigeria company, that is, CITA Section 14 contains provision regarding companies other than Nigeria companies in shipping or air transport businesses. All these ones are just theory. I think you can read them up yourself. There's not much story there. The profit or losses of such company deemed to be derived from Nigeria in the full profits or loss arising from the carriage of passengers. So if they make any profit in Nigeria, that profit they made in Nigeria is deemed to be taxed in the full profit or losses arises from the carriage of passengers. Mails, livestock, or good ships, or load into an aircraft in Nigeria, whatever they get as income or revenue in Nigeria will be taxed. This does not apply to passengers, mails, livestock, or goods which are brought into Nigeria. Take note of that. If the goods were brought into Nigeria, that revenue is not earned in Nigeria. But if the goods are taken out of Nigeria, so those who take the goods out of Nigeria will pay in Nigeria, and that revenue will be the one we are going to assess. Okay, so let's look at it. So the sums received in respect of passenger carried in Nigeria as referred to above, there shall be applied the following. What is the first one? The ratios of profit or losses of an accounting period before depreciation. So the total sum receivable in respect of business of the company. Then the second one, we'll be looking at that example soon. So I'm just giving you the step. Then the ratio of depreciation to the total sums received or receivable as certified by the tax authority. So that would be certified by tax authority where non-Nigeria company is registered to the satisfaction of revenue service. This ratio shall be applied on the Nigeria income. So it means we'll be calculating the ratios of depreciation, and that will be applied on the income as depreciation. Now note this, this situation will apply where the revenue is satisfied that the tax authorities of any other country computes and assesses on a basis not materially different from that prescribed by the CTA of Nigeria. Where the ratio referred to above cannot, for any reason, be satisfactorily applied, then the profit deemed to be derived from Nigeria may be computed on a fair percentage on full sum receivable. We'll be doing all this as we move on. Now, what are the procedures? The procedure number one is determine the global income. So we are going to calculate what are the global income in Nigeria, in other countries, what are the total income by aggregating all the incomes of the particular company in the relevant year of assessment. Then determine the Nigeria income. What are the income or revenue earned in Nigeria? We'll also be calculating that. Compute the global adjusted profits by applying the principle of trading profits adjusted. So will be adjustments. So we'll be looking at that question shortly. Compute the global adjusted profit ratio using the formula. What is the global adjusted profit and what is the global income? Then multiply by 100%. Okay. 5, you must make sure you follow all these steps one by one. So compute the depreciation ratio using this formula. So depreciation ratio is depreciation expenses charged in the account over global income multiplied by 100%. So whatever you get, that is your depreciation ratio. Then that's what you are going to use in step 5. So compute Nigerian adjusted profit. How do you calculate that? You say the gross profits ratio you have multiplied by income in Nigeria, and you are good like Gouda. You are good to go. Okay, so compute capital allowance relief. So how do you calculate capital allowance? You use that ratio you calculated in number 5 as depreciation to multiply by the income you earn in Nigeria, and that will be your allowance relief. Determine the total profit. How do you calculate the total profit? At Nigeria adjusted profit, less capital allowance, then you get the total profit. So you get the profit and multiply by the tax rates, and you are good to go with that. Okay, so very quickly, without wasting, I will be solving just one question under this section. The statement of comprehensive income of Kukute Oriogan Airlines or Airways, a company incorporated in Germany in 2015, shows the following in respect of the year ended 31st December 2017. Income from freight or income from passenger freight. So these are the breakdown of their income. Out of Nigeria is not earned in Nigeria. Then out of Nigeria is earned in Nigeria, pardon me. Then income from passenger freight into Nigeria. This one is coming from other country into Nigeria. So This money will not be collected in Nigeria. It has been collected in other countries. They only brought those goods into Nigeria. So the revenue is not earned in Nigeria. The income from passenger spreads on other routes, that is not in Nigeria and not into Nigeria. Maybe from another country to Kenya, to Ghana, or to London, and the like. So addition of these three gives you 4.9. Now, administration expenses, all these were given to us. Financial expenses, depreciation also was given, and other allowances was also given. Okay, so they gave us net profit for the year. And the Federal Inland Revenue Service is satisfied that the tax authority of Germany computes and assess the profits of companies operating aircraft on substantially similar basis as Nigeria. Don't forget, the first thing we said is that it must be on what they have computed over there must be almost the same thing, substantial related, similar to the way we compute our own before we agree on what to do with that. So calculate the tax payable for the relevant tax year. So we'll be looking at this and share that together. So what is the first thing? What's the first step according to this? The first thing is determine the global income. What is the global income? From here, the global income is 4.9. This is the global income. It's step by step, adding all the various revenues together. What is the second stage? The second one says, determine the Nigerian income. What is the Nigerian income? From this question is out of Nigeria, which is 300. So 300 is the income out of Nigeria here. What is the third step? Third step says, compute the global adjusted profit. And how do you calculate global profit? To calculate adjusted global profit, let's go back there and see. So what do we need to do from this information? So to calculate computation of global adjusted profit, all you need to do is, this is our net profit. The net profit they have here. You know, when you want to do your adjustment, when you want to do normal company income tax adjustment, you will start with net profit. You add back depreciation, add back the salary expenses, and then other items. So the same thing you are doing here. So adjusted profit, we have the net profit, add back depreciation, and other disallowable expenses. By the time you deduct, by the time you add back, you'll be having 2.9 as adjusted profits. What is step 4? Step 4 says, so from here now, we have depreciation and other disallowable expenses. And that's what they have done by adding it back to your net profit to adjust for it. Then after that, what is the next one? They said number 5 or number 4, compute global adjusted profit. So let's go back there now. To compute global adjusted profit. Okay, this is number 4 we are now. So compute global adjusted profit. That will be gap, that is global adjusted profit over global income multiplied by 100 over 1. What is the global adjusted profit? That is the figure we just calculated now, 2.9 over the global income. The global income is 4.9. Then after that, multiply by 100%. We're having 60% as the global adjusted profit ratio. So the next step, which is step 5, says that step 5 says compute depreciation ratio using formula. So to compute depreciation ratio, what do we need to do? We will say depreciation charge over global income multiplied by 100%. So what is depreciation from this question? The depreciation here is 588. What is the global income? Global income is 4.9, and that is what they have done here. Multiplied by 100% gives 12%. Then number 6, Nigerian adjusted profit. How do you do that now? So the first 60% we got from adjusted profit ratio, we multiply by income in Nigeria, the revenue from Nigeria, which is 300. That will give us 180,000. I hope I'm not rushing. Then in next step is to calculate our capital allowance. Capital allowance, you just charge your depreciation ratio on income or revenue earned in Nigeria. So that is 300. So 12% of 300 will give you 36. Then what will now be our taxable profit? Our taxable profit will now be the Nigerian adjusted profit. So we have gotten adjusted profit here, which is 180, then less capital allowance, which is 36,000. Then add back, less it, and you get 1.144. So apply your tax rate on it, which will give you 43,200, and that is the tax for that year. So taxation for special businesses is not that difficult, except for that insurance aspect. And Ican have not tested that insurance aspect, but they might test it when you are writing. So make sure you cover every aspect of the topic. So I believe you enjoyed the class. So we'll be looking at another one later when you are ready to do that. Make sure you are reading and solving as many questions as possible at this time. So thank you and have a nice day. So don't forget to subscribe to our YouTube channel. Tell others about House of Accountants. Join our revision classes and join our lecture as well. We have so many secrets to tell you about these Ican exams, and we want you to be part of it. So thank you very much.